So, you may have heard, I'm not sure if you were seated with a microphone, with the thingy in your ear, which you could hear Jim Lebenthal lay out the case that, he is more of a value investor. He is more, geared towards the cyclical parts of the market, which he argues are cheap and cheaper at this point than some of the mega cap tech stocks. Now, if you think inflation is coming down and you think rates have peaked, and generally speaking, you think that the economy is not as terrible as some would have you believe, what about the case that he makes? Are you looking actively for other parts of that kind of market to put money to work?
Yeah, no, on the long side, we have ample opportunity in technology. And I'd tell Jim, Meta may have been one of the greatest value stocks of all time this year. I think it still is. It's a company that people expected to grow at 2% in Q2, and they just guided 2 to 14% in Q2. So we have growth returning for a stock that's still valued as though it's a value stock. But when I look at other parts of the markets, take autos as just one example. In 2022, they were able to pass on massive price increases because we had supply chain disruption. Now supply chains are being normalized. The cost of a cargo container coming from China to the west coast of the United States has gone from $12,000 or $15,000 at its peak back down to $1,700. Those price reductions are going to be passed on to the consumer. I think Tesla's had more price reductions on its autos in the past few months than they had in the past few years. And so I think it's going to be difficult for companies like autos to pass on price increases in a world that is starting to deflate around key prices.
That's really interesting. And it's funny, I guess ironic that you brought up autos of all things because, and Jim's sitting right here, General Motors is one of yours, which got upgraded today, by the way, by Adam Jonas over at Morgan Stanley. But how do you respond to that sort of commentary and fundamental analysis from Brad?
It's good fundamental analysis. I think where Brad and I will differ is on a question of degree, of how quickly is the supply chain healing and how long will it take for these prices to come down? Because simply put, the inventory on dealer lots is still just tremendously low. It's half of what the normal average is, and that's frankly just still giving pricing power to the auto manufacturers. Now, in GM's report last week, what you saw is, once again, for the 19th time in 20 quarters, they beat guidance. I don't know what that hissing is. Is that me or somebody else?
We're working on that.
Yeah, okay.
We can all hear it.
All right. But so for the 19th out of 20 quarters, GM beat their estimates for earnings, raised guidance, which indicates that the consumer is hanging in there even with these higher prices for cars. And this isn't a me versus Brad thing, but at 5 times this year's earnings below book value and 0 net debt at the automotive level, it's actually a great buy here. It's not just that it's cheap. It's that the growth is still there.
So, you will have people, Brad, making that case. And let me just let everybody know, we're not naive to the technical issues that I think we're all experiencing here. I'm assuming that most of you at home can hear it. We're working on it. So if you can bear with us on that, we'll do our best. So, Brad, let me ask you this. Meta, right? You touched on it already, obviously. How responsible do you feel for what we've all witnessed taking place within that company and then the results in the stock? And for those who don't remember, it was your letter, right, that urged Meta to get more fit, as you said. Do you feel responsible for this turnaround in some respects?
Not at all, Scott. Listen, any investor in the world knows that founders, CEOs, employees who show up and grind every day, the board, they get all the credit, but they also get all the blame when things go wrong. I think as investors, I've always viewed myself as a partner to the companies that we invest in. I've always viewed myself as a truth teller, as a sounding board when they want to think through potential priorities that they may set. And so I think it was an open secret last year in Silicon Valley. Everybody knew. All companies in Silicon Valley had become bloated as a result of zero interest rates, hired too many people too fast. And the consequence of that was that the pace of product releases slowed down. The pace of innovation slowed down. Earnings, started decreasing. And so I just want to give all credit to Mark and to the team. It's incredible to watch the turnaround, really, that they're leading. It's important to note that this wasn't just a one-time cost reduction by Meta. Read Mark's letter from March of this year. He said this is the year of efficiency and AI. They reprioritized the company around AI. They got efficient. The company is moving much faster. The product releases are coming much faster. And so I think he's setting leadership tone for all of Silicon Valley, for not only Meta, that others can follow. But I was incredibly impressed. I don't think I've ever seen a company at this scale move this fast.